The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or APR. They give us the number you need to put into your mortgage calculator to find out exactly what your principal and interest payment will be. And if you don't have a mortgage calculator, ronismylender.com, ronismylender.com. You can get our mobile app, and that does give you a mortgage calculator. And if, by the way, you wanted to apply for a loan, it's got the loan application on there as well. But the mortgage app does not require you to do anything. It doesn't cost you anything. You put the numbers in there. So let's take a look. What did loans lock at on Friday? That's the latest data available. 30-year conventional loans, they were down 6.478. 30-year jumbo loans, they were up 6.874. FHA 30-year fixed rate loans up 6.315. 30-year VA loans 5.871. They're down. And USDA 30-year fixed, that one was up 6.461. That's for our rural areas. Generally, no down payment on the USDA loans. There are other restrictions that do apply. And as we mentioned earlier, if you want our market commentary, our thoughts about the market, we usually get that out as early as the data allows. rsrmarketminute.com, rsrmarketminute.com. It is free to you. So all you have to do is go in there and take advantage of getting that thing and enjoy it. Again, you can use it however you wish. Let's see what the markets are doing today. That gave you the data from yesterday, but let's see where today's data is. S&P 500 is now up 22.42. 10-year Treasury down 3 basis points, and the mortgage-backed security, that's up 13 basis points. The bond is up, which means the rate is down. It's mathematics, so it's not a question mark. It is just straight mathematics. So the bond yield on the 10-year Treasury is down 3 basis points, and we've got the mortgage bond itself. Anybody want to know where mortgage rates come from? Some people want to think that it's the 10-year Treasury. Well, that's just because it's easy and that's readily available. If you have to look a little deeper, it's also readily available to find the mortgage bond, but that's what we're working from, and that's where mortgage rates legitimately come from, is the mortgage bond. What's driving all of this, though, is they're all heading, as I mentioned, heading off to Jackson Hole. And let's take a look and see what we've got to say here. What's going to drive all this? Stocks mixed. Bonds are slightly higher to start the week. 10-year trading, again, as I mentioned to you, 3.87, remaining under the 3.92 resistance level. Looking at the charts, there's ample room for bonds to move higher and for yields to move lower in the coming week. But it will all depend on Fed Chair Powell's commentary at the Jackson Hole Symposium. Each year, central banks from around the globe gather at Jackson Hole Symposium in Jackson Hole, Wyoming. It's always an important meeting that our Fed has used in the past to signal policy changes and the longer-term outlook for Fed fund rate. Meeting kicks off on Thursday with Fed Chair Powell speaking on Friday. Everything has changed in the economy since that meeting, except for the Fed. Back then, the Fed funds rate was 5.25 and 5.5, and it's still there today. Meanwhile, inflation has moved much lower. Unemployment rate has increased by 0.8 of a percentage point. In 2023, core PCE 4.3%, core CPI 4.7%, unemployment rate 3.5%. Now at the meeting, 2024, core PCE 2.6%, core CPI 3.2%, and the unemployment rate is 4.3%. We know that the weakness in the labor market is something the Fed is focused on and will likely determine whether the Fed cuts by 25 basis points or 50 on September 18th. Remember, 25 basis points is just an easy way of saying 0.25%. 50 basis points is 0.5%. It's just an easy way of dealing with the numbers. They'll have additional jobs data to go off as the BLS will release their benchmark revisions on Wednesday at 10 a.m. The revisions. This will show revised data up until March of 2024. And while it's old and probably not market moving, It will let the Fed know more detail on how strong or weak the labor market really has been. Goldman Sachs estimates that the Bureau of Labor Statistics revised their figures down by 600 to 1,000 to 1,000,000 jobs, which would be significant and show that the jobs market is even weaker than previously thought. Has anybody told you that the market is a little bit weaker than they've been previously telling us? Or
surprise, surprise,
is
surprise.
it a big surprise? Also on Wednesday, the quarterly census of employment and wages, QCEW, will release their preliminary job revisions figures for the first quarter of 2024. This too will likely show that the Bureau of Labor Statistics continues to overstate the job growth. Biggest report of the September 18th Fed meeting will be August jobs report, which will be released September 6th. If the unemployment rate remains at 4.3% or moves higher, the Fed will likely be pressured to cut 50 basis points. If it comes back to 4.2 or 4.1, the Fed will likely go with a 25 basis point cut. Of course, the job revision data from the Bureau of Labor Statistics and QCEW can also play a role and could let the Fed know if they're behind the curve as well. I think we've probably done a good job of that before, already. So we were the first ones to signal the Fed rate cuts had to come from the employment side of the Fed's mandate. Last year, we mentioned that we broke down last year's Jackson Hole meeting and said that we'll need to see weaker jobs data for the Fed to change their stance and cut rates. Fast forward to today, the unemployment rate has risen unexpectedly to 4.3%. Now everyone is keying in on the idea that the Fed will have to cut based on the labor market. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.